debt hurts, literally. If you're in debt, you are 3 times more likely to have suicide thoughts. In 2008, during the Great Recession, suicide rates rose. And if you're in debt, you're more likely to be obese. So in today's episode, I'm gonna show you how to erase debt. I'm gonna give you the ultimate guide to getting out of debt. We call it the Debt Blaster. And here's how we're gonna do it. We're gonna do it in 10 steps. If you follow these 10 steps, you will be out of debt. And you'll be making money while you sleep. I'm Chris Naugle, and this is another episode of What Now? What's Next? Let's get ready to be the bank. We need to talk. Here are some of the statistics that go behind federal student loan debt. The outstanding federal loan balance is $1.645 trillion. And that accounts for 93.1% of all student loan debt. Not only that, 43.6 million borrowers have federal student loan debt. Phew, that just blows my mind. This one got me. The average federal student loan debt is over $37,000. If we roll private loans in there, we're over $40,000. The average. As we're talking about averages, the average public university student borrows $32,637 to obtain a bachelor's degree. Not master's, bachelor's degree. Professionals that graduate, they take over 45 years on average to pay off their student loan debt. 45 years. So you finish school in your 20s, just know that it's gonna take you only 45 years to pay off all your student loan debt. Yeah, that makes sense, doesn't it? 21% of borrowers see that their student loan debt balance increases in the first 5 years of their first loan. How about medical school, right? Check this out. The average medical school graduate salary is not sufficient to make their student loan payments. So you're probably thinking, well, what does this cost? Well, the average student loan payment is $503 every single month. The average student loan accrues $27,000 in interest over the 20 years. And that's only at an interest rate of 6%. Now rates are higher. Up to 42% of the average borrower's total cost of repayment is interest. So why don't we do this? Why don't we just stack student loan on top of all the other average monthly expenses that American households have? So remember I said the average student loan debt, $503 a month? Yeah, well that's on top of your auto payment, which is averaged at $726 if you want a new car, $533 if you're driving a used clunker. Okay, then on top of that, you got $263 in gas and maintenance, plus another $179 in car insurance. You adding all this up? Health insurance is about $117 a month, and that's an employer-sponsored plan. If you got to get it from the marketplace because you don't have an employer that provides health insurance, it's only going to rip you $477 a month. Your mortgage, the average mortgage is about $1,768 a month. Food is gonna come in at $779 and climbing. Entertainment, I mean, come on, pets, hobbies, television, that's $288 a month. And then, you wanna take vacations, so that savings that you do for vacations, another $165 a month. And then savings, just, savings. And this accounts for very little, because that's $250 a month. Only $250 a month is being saved on an average. That means your total monthly cost just to survive, I know you could cut out Netflix, but $5,398 a month. So here's the bad news behind all of this. All this extra expenses creates much higher credit card debt. Matter of fact, we were looking at a video I made just a few years back, and I was like appalled that credit card debt topped $400 billion. So this is now 2023, a few short years later, and it's over $1 trillion. But you know what? There's a couple other things too we should talk about. That means that credit scores on an average are going down. Yep. That means there's less savings, meaning less emergency funds. That means retirement savings have been cut significantly. That means there's no financial legacy being left behind. And it also relates back to, like I said in the beginning, bad health. I mean, stress is not good for your health, not to mention depression and suicide thoughts. So if you follow the laws of wealth, you really think about how much you should be saving, it's about 10% of your gross income. Or your emergency fund should be at least 3 to 6 months. Are you saving that much? Well, by the statistics, you're not. So let's just move on to retirement. Well, millions of Americans are missing out on retirement accounts because of all of this. I mean, they gotta have a degree, right? You gotta have a bachelor's degree just to get in the game. So let's put retirement off. And that's why Social Security keeps pushing the age back. Well, yes, we're living longer, but they want us to work longer. No longer can we work 20 years or maybe even 30 years and then just retire. Well, here's some of the reasons why. An estimated 155.6 million Americans, that's 60% of Americans, lack a retirement-specific savings account. That's right. That includes half of the baby boomers. That includes 56% of Gen X, my generation. 66% of millennials are lacking retirement. And this one should really wake you up. 73% of Gen Z lack a retirement. Now, you would think as we start doing better as a nation, we're getting more educated, more bachelor's degrees, you would think that, we'd be saving more, right? Did you just notice how through the generations, less and less have retirement? I want you to understand what I'm telling you here. This is not good. So I know you're probably feeling a little screwed right now. Hell, you might even want to throw in the cat. I get it. But you know what? You're here for a reason. It's not a coincidence. That's what we're gonna do. We're not gonna throw the cat in. We're gonna finish this game. But actually, hang on a second. I need to ask you for something before we get into this. I need you to subscribe this. And while you're at it, smash that little alerts bell just so you get notified every time we put a new video. Sorry, Shauna. Put a new video out. Let's dive in. So how I want to do this is I want you to think about this like losing weight. So if you wanted to lose weight, what would you do? First thing you do is probably track the amount of calories you eat every day. Maybe then start working out on a daily or bi-weekly basis. After you start doing that, you're gonna get into a routine and you're gonna start watching what you eat. You see, all of that takes discipline and it takes being consistent and persistent if you really want the results. The same is true with money. Taking back control of your money takes discipline, and that's what you're gonna have to do. But I've broken it down into 10 easy steps. So step number 1, your dream body. First, we gotta understand, what are your goals? Where do you wanna be in 10 years from now, 5 years from now, next year? All of these things matter. I had a mentor once that pulled me aside and he said, Chris, can you tell me what your perfect day looks like? My answer was, I couldn't, but I can today. So that's what we gotta do. We gotta imagine what that dream body is for you, what your perfect day looks like. You can't get any further until we know where you're going. All right, step number 2, it's time to weigh in. We gotta assess your damage, which the best way to do that is to create a budget. Now, in a budget, on the left side, just think of it as a T-chart. On the left-hand side would be all your incomes. And it could be any income. If you mow lawns on the weekend, if you wait tables on the weekend, all that would be put in there. Yes, this is just for you, so put the cash income on there as well. We need to know exactly how much you're bringing in every single week and every month. Now on the right side, how I want you to do it is at the top, I would just want you to put all your regular expenses. Going out to eat, groceries, rent, utilities, all the things that are pretty regular on a monthly basis. And I want you to break them down weekly too. But then underneath that, I want you to draw another line across and I want you to put your debts. This is where those pesky credit cards go. And break the credit cards down. Break them down by who the credit card name is, the balance, the interest rate, and the monthly payment that you're making. And do that with all your debts. Car loans, everything, okay? Add those 2 columns up on the right. Are they more than what you're bringing in on the left? That's assessing the damage. And if they're not, are you saving the difference? Like, is the amount that you're bringing in minus the expenses and the debt payments, is it the amount that you're saving every month. This is essential. It's kind of like weighing in. And if you don't know these numbers, you don't know how you actually look financially. And this, I know, sounds crazy, but this is the other 95% we're talking about, not you. A lot of people don't know this. They literally go through every week and every month in the unknown. They kind of hope and pray that they're gonna make it through, which probably is why we've gone from $400 billion in credit card debt to over $1 trillion, because you can't live your life that way. Yes, I know the US government does, but you don't have the printing press like the Fed does. So it's time to get financially fit. Which brings me to step number 3. This one's the tough one. You gotta sacrifice the donut. I know. No donuts were harmed in the making of this video, but you gotta sacrifice the donut. You're gonna have to make some cuts. You're gonna have to give some things up. I know, it's tough, I know. Once a luxury, now a necessity, I get it. But unfortunately, we're gonna have to go backwards before we can go forward. So if you're not saving money today, if you're not able to make all those payments without borrowing more money, then we gotta give some things up. Slash the Netflix, cut out the Starbucks coffee, all those things, or hey, the other side of it is, you can sacrifice your time. On those weekends when you like to just relax, well, maybe now you're gonna actually have to go do the hard work and get another job or do a side hustle. You're gonna have to bring in some more income. There's only 2 things that can move, right? You can either reduce expenses or increase income. So I wrote down some things that you can consider, and this might be helpful. I mentioned this before, entertainment, you can cut that out. You could change your diet, you could eat at home more. I know date night's nice, but just cook at home. You could stop the vacations. They're always fun, but hey, listen, when you're racking up credit cards, it's not worth it. You could downsize your house, you could shop cheaper, you could save on utility costs, you could create meaningful gifts. My mom used to say, Chris, we're not heating the outside. In other words, shut the door. Hopefully you're not saying that anymore, but instead of going to the gym, you could work out at home. Can't afford the weights, that's fine. Push-ups, pull-ups, sit-ups, and just go for a run outside. It's good for you. I do it every morning. Stop spending frivolously. Stop spending on things that you really don't need. You didn't need those Nike SB Dunks. You didn't need that new outfit. Your other one was just fine. Just remember, 2 steps back for infinite steps forward. That's what we're talking about. Some of you might have to look at the house you live in and you might have to downsize. Some of you might have to sell the house, take the gains, and live in an apartment for a few years. You know what's interesting? I had to do that. So, how did I get where I'm at? 2 steps back to take an infinite number of steps forward. I'm asking you to do the same. And make no 2 ways about it. It doesn't mean you can't have those things in the future. Matter of fact, if you sell your house today and move to an apartment to save money, listen, you're gonna have a bigger house later, but it's the sacrifice. That's the important part. All right, moving on to step number 4. It's time to get your ass in the gym or working out at home. Doesn't matter. It's time to do the hard work. It's time to put that budget into action. It's time to start really watching the budget every week, every month. You gotta stay on top of these numbers. It's time to balance that checkbook. It's time to really get your financial house in order. And you know what? It's easier now than it ever has been because they got all these really cool apps that do all this for you. Back in the day, when we had to walk uphill both ways going to school, yeah, we didn't have apps. We had pen and paper. So let's talk about some of these apps because the single most important thing you can do is you gotta be saving money. So these apps will help you do that. Check them out. One is called Money Manager. Another one is called Every Dollar. Write these down. Another one's called Good Budget. You all probably have heard of Mint. That's a good one. And Rocket Money. There's a lot more than just that, but those are some good ones to get started. Find one that you like and use it. And don't cheat yourself. I know it's easy to put the hand in the cookie jar and like nobody's looking, but nobody really is looking. But down the line, are you gonna look back and say, I should have, I could have, I would have? I hope not. So let's move on. Step number 5. It's time for you to get a workout buddy. What do I mean by that? Well, I mean, it might be time to put some of those people you hang out with in timeout. Maybe they're a bad influence. Maybe they're always telling you, oh, let's go do this. And you're like, oh yeah, nobody's looking, all right. It's time to get around like-minded people, people that are doing the things you want to be doing. That will make a difference, but it will require a sacrifice. I literally just got back from a mastermind. I was out in California at a mastermind around some really high-profile people. You know, sometimes like in the Buffalo area, I might be in the top 1%. But when I go to other places and I get around really successful people, I might be one of the top 30th percentiles. See, there's other people doing a lot more than you're doing and living the life you want to be living. Get around them. Find out where they're at and go there. Put yourself in the place to get you around the right mindset instead of the toxic mindset that so many of us get stuck in throughout our lives. It makes a huge difference. And I promise you this, and I'll speak for myself. When I'm around abundant-minded people, people that are successful, it's hard when you got to go back and be around those limited-minded, scarcity-minded people. It's actually a toxic environment, so avoid it. Don't be around it. And I got a suggestion for you. Every single week, we do a thing called Wealth Webinar. It's every single Wednesday at 1 p.m. Eastern. We like to call it the campfire. You know, we got a bunch of really high-level people, successful people, abundant-minded people, and you can get around that campfire and share stories and listen to how they got where they're at, because you know where they started? The bottom. They started when they were deeply in debt. They started when they were in trouble, when they weren't financially fit. And maybe that's your place too. So get around the campfire every Wednesday at 1 p.m. We got a whole bunch of other webinars, but let's keep going. Step number 6. This is where I'm going to introduce a good friend of mine. Her name's Christy Van. She's got a YouTube channel called Vantastic. You know what she teaches? It's called Velocity Banking. What is Velocity Banking? Well, it's quite simple actually. It shows you how to use the velocity of money in your favor. And she does this a lot of different ways. She does it using the lazy money sitting in the walls of your house. Yeah, equity. Yeah, if you got equity in your house, she'll show you how to use that equity and use the velocity of how interest works on money to put you in a much better place. Now, I'm not going to pretend to be an expert in velocity banking, but I will tell you that I work with Christy. And Christy has taught me velocity banking, and not only taught me velocity banking, I am using it right now to pay off my mortgage. I don't really have any debts left because I use something called the infinite banking concept, which we'll cover next, to get all my debts paid off, with the exception of my primary mortgage. Because like you, you're probably like, why would I pay my mortgage off when it's a 2.5% or 3% interest rate? Well, if you understood the velocity of how the interest is being charged on that 2.5% or 3% mortgage, you would understand that it's not 2.5% or 3%. It's actually probably closer to 20 or 30% that you're paying. I know, it doesn't even sound real, but it is. And she can demonstrate that. So get around her campfire as well. Vantastic on YouTube, and learn how to apply velocity banking in your life. Let's move on to step number 7. This is probably single-handedly one of the most important steps, but I can't get it all out in this video. It's called the infinite banking concept, okay? Which is a process of you taking back the banking functions in your life. But I want to give you a quick sampling of what that looks like. So just pay attention. The infinite banking concept requires you to save money. So you can't use the infinite banking concept or step number 7 until you're saving money. So if some of you are already saving, after you did your budget, you're like, hey, I'm saving money. Great, this works. But if you're not, if you're paycheck to paycheck, you can't go past step number 6 until you work with Christy and Vantastic to know how velocity banking can create money that then can go to savings. But here's step number 7, the infinite banking concept, and how you can apply that in your life. You see, this will really change the way you think about money, because it's going to really put you in control of your money, and it's going to force you to think like you are the bank, because that's exactly what you're doing. You are taking back the banking functions in your life, and here's how it works. It's very simple. It involves one change. The money that you make, the money you would normally save, all we're going to do is we're going to change where that money goes first. So right now, I want you to envision a circle, just like I'm drawing on the screen. There's a circle, and your money, where your savings is gonna go into your own bank, right on the left-hand side of the circle. But see, we're gonna look at the other side of the circle. That's the opportunity zone. But you see, maybe we don't have opportunities, or maybe we're not ready for those opportunities yet. But those opportunities exist in the form of credit card debt, car loan debt, mortgage debt. So you've got debts. Now let me pose this to you. If you had money in the left side of this circle in your bank, but over on the right side of the circle, you had debts that were almost like holes in your boat. Money was leaking your boat every single month. Every credit card payment, every car loan payment. So if you got money in your bank, okay, your bank, not traditional banks, you would then take a loan from your bank or around the circle and pay off those credit cards in order from lowest balance to highest. So now you've paid off those credit cards with a loan from your bank. But then you wouldn't be done there. You would take the amount of minimum payment or whatever you were paying to that credit card, you would then change the name on the check and you would write your name on the check. And then around the bottom part of the circle, that monthly payment that you used to give to Visa, Amex, Discover would now go into your bank. So all we did is we made a complete circle. Your money started on the left, it went over to the right to go to work, paying off debts in this case. Then once those debts are paid off or paid down, we take whatever was freed up and we move that money around the bottom part of the circle into your bank. What have you done there? Well, you have 100% taken back control of your money. But what you're not gonna learn in today's video is how changing where that money went first. Instead of putting it into a traditional bank account, you put it into a specially designed and engineered whole life insurance policy, of which your money gets to earn uninterrupted compounding interest even when you take the money out. Because when I told you took the loan from your bank, it was you taking a loan from your policy, which enabled you to have all of your savings still continue working for you. And you were able to make a spread on your money while it was out there paying off debts. Now, I got other videos that teach you all about that, but I just wanted to give you a quick snapshot of what that looks like before we move on to the next step. Step number 9. We're gonna continue on with the infinite banking concept, but what we're gonna do is we're not gonna pay off debts anymore. We're gonna finance things. We're gonna do some fun things. Because you all remember how that worked, right? We put money into a specially designed and engineered whole life. We paid off all of our debts. We took the amount from the debts and we rolled it back into the account, which means all of that money ended back in your account, but it didn't just end up back in your account. You see, you paid your bank back with the same amount of monthly payments you gave to the credit cards. So you not only got all the money back, but you also recycled and recaptured all the interest you used to give away. How much is the interest on your credit cards? 15, 20, 29%? That's like your money going out and earning those returns because you recaptured that money. So now what we're gonna do is we're gonna finance things like cars. We're gonna just go back into that account and we're gonna take money from that account in the form of a loan, that specially designed whole life, and we're gonna buy the things that you wanna buy. Let's just do a car. You buy a car, but you don't just pay cash for the car. Because remember, you borrowed from your bank and you bought the car. So what we're gonna do is we're gonna repay your bank back. But how are we gonna do that? Well, we're gonna do that with the exact same interest rate a traditional bank would charge you. We just bought a car with a loan from your specially designed and engineered whole life. The car is bought and paid for, but you still owe the money back to your bank. You see, if you're gonna be the bank, you gotta think as if. And what that means is you gotta be an honest banker. You can't ever steal from your bank. Because you can't steal from Bank of America, you can't steal from KeyBank, you can't steal from any of the traditional banks. You go to jail or your credit gets hammered. So when you are the bank, you can't steal from your bank. So you got that shiny new car in the driveway, bought and paid for cash from your specially designed and engineered whole life. Add one step. Here's what you're gonna do. You're gonna go to bankrate.com and you're gonna look at a car finance tool or just a car loan calculator. And what you're gonna do is you're just gonna plug the numbers in. You took $40,000 from your account, so you got $40,000, you plug that in. You're gonna take a 5-year loan, that's the duration of the loan, same as you probably would do with a car, in a finance company with a car. And then what you're gonna do is you're gonna put in an interest rate. Now, what is the interest rate? It can be any interest rate you want. You're the bank, you set the rules. But just remember that the insurance company charges you 5% simple interest to use the money from your specially designed and engineered whole life. So what I'd always suggest is that you charge yourself at least what the insurance company is charging or more. Now let me tell you how I do it. If I buy a car, which I buy lots of cars using my private banking, my specially designed whole life policies, when I buy a car, I literally ask the place I'm buying the car from how much they would charge in interest. What's the best interest rate they can find me? So let's just say it's 7.5%. That's about what my last car purchase was. So Ally Bank was the bank that I ran the research on. They charged 7.5% for a used car loan. So how much do you think I paid my bank back? If any of you guessed 7.5%, you're right. Why would I pay my bank back less than what I would pay their bank? Well, I wouldn't. And not only that, here's the coolest thing. Every car payment I make back to my policy as a loan repayment, every car payment is money back in my account that I can use the next day. So if your car payment was $750 a month and you made a payment back to your policy as a loan repayment back to your bank, how much money is available when that check clears? $750. But you see, what I just told you how to do with a car enables you to get all the money back for every single car you will ever buy, drive, and own. Let that sink in. But see, it gets even better. The more cars you buy using your private banking, by following this circle that I keep drawing, you'll not only get all the money back for every single car you buy, drive, and own, you will also make money on every single car you buy, drive, and own, the same way a traditional bank makes money on you when you buy a car and finance it through them. Think as if you are the bank, and you will become wealthy beyond your wildest imaginations. Because it's just math, folks. Step number 10. This is where it gets super fun. We just talked about how you can use your private bank to get all the money back for every car you ever buy, drive, and own. We talked about how setting up the infinite banking concept in a specially designed and engineered whole life can pay off all your debts. But now, this is where it gets fun. This is where we get to start having other people pay your car payment. Other people pay your student loan debts. Other people pay your mortgage payment. So how do we do that? You become the bank. You've already heard me talk about it in the last couple steps of changing where that money went. It went into that specially designed whole life. We used it to pay all the debts off. We used it to finance cars. So we've taken back all the banking functions in our life. We control it all. But now you got all this extra money sitting there, and now you're thinking, now all my debts are paid, my cars are bought, how do I then get this money to work for me? What does a bank do, folks? They lend money, don't they? Well, you're gonna do the same. You can go to a website called privatemoneyclub.com. Create a free profile. Go on there and look at all the deals. Private Money Club is like a dating site for your money. That's right. If you've got money, you get to meet people that need money, just like a traditional bank. And what you're going to do is you're going to find a deal that makes sense for your risk tolerance, and you're going to then be the bank and you're going to fund that deal. I do this all the time. I lend my money between 12 and 15%. And when I do that and I lend my money out in first secured position with a personal guarantee, why? Because just like a bank, I want to mimic what a bank does. And when I go to a traditional bank, they make me sign over and put a lien on my car, or they make me sign a mortgage. I'm always putting the bank in a collateralized position for whatever asset I'm buying. So you want to do the same. So if you're going to lend money to somebody and they're going to buy a house for rental, well, take the house as collateral in first lien position. You could always do second or third, but I suggest first. Not only that, if they stop making payments, make them sign a personal guarantee before you do the deal. Now, all their personal assets, their cars, their bank accounts, their retirement accounts, now are being pledged so that they're going to make payments. You see, I do this because that's what a bank does. But you see, I also lend money out and I get monthly payments for my money. And I lend at a rate of 12 to 15%. That's just what I choose to lend my money out at. And when they make those monthly payments back to my banking system, I literally can use that interest that's paid to me on the money that I lent out to fund new purchases, to fund new investments, to fund anything that I want. In other words, Somebody else is paying my car payment. Somebody else is paying my mortgage payment. Somebody else will eventually pay for Vivi's college education. That is the ultimate. But you notice, I had to take 2 steps back to take these infinite steps forward, because every step you took in this 10-step process got you to the next step. You can't skip steps. And if you do, the whole thing will unravel and it will not work. It's kind of like someone trying to lose 20 pounds, but yet they skip the workout. They skip the diet, or they skip following the plan that they put in place. What happens? Well, they don't lose the weight that they want. They end up putting on weight, and they sit there and they say, what did I do wrong? Well, you skipped a step, which is exactly what you can't do. Here's the cool thing about all of this. So remember earlier we talked about the E-fund, the savings or the emergency fund? We talked about retirement, we talked about college savings, all those things. What if all those things were automatically taken care of or automatically funded because you changed one thing, and that was where your money went first? And then you added one step, which is being the bank and being an honest banker and repaying your bank back every penny instead of stealing from your bank. Yeah, indeed, you would have an emergency fund. Indeed, you'd have a supplemental retirement account that you could draw from to supplement your retirement. And indeed, you could use that money to fund a college education for you or for your kids. But that brings me to the bonus session, step number 11. Step number 11 is cool because it happens automatically if you followed the other steps. So what is step 11? Well, it's your legacy. So what happens when you're no longer here, when you graduate and you go on to a better place? What's left behind? How are you remembered? Well, I promise you, you won't be remembered for the cars in the garage. You won't be remembered for the nice sofa in the living room that you were so proud of paying cash for. You'll be remembered for the things you left behind, the knowledge you left behind to your children. But you've taught them all these steps. You've taught them how to be the bank. And now that they know how to do this, they're going to need some money as well. Which, because you decided to change where your money went first and you set up a specially designed and engineered whole life insurance policy, that's right, that comes along with a death benefit that will be paid out upon your death, tax-free if built properly, to your beneficiaries, which could be your trust, it could be your family, it could just be your kids. And that gives them the money to then get a faster start than you were able to. You see, the legacy, whatever your legacy is an automatic if you follow those 10 steps that I gave you before. So if you follow these steps, step number 11, the legacy, is an automatic. It's guaranteed to happen. The death benefit will be paid out because you put your money into life insurance. And life insurance self-completes. It is one of the guarantees about a whole life insurance policy. So I'm gonna make an assumption. 10 years from now, what is your life going to look like? What is your financial world going to look like? Well, there's 2 outcomes. Outcome number 1 is you follow these 10 steps. In 10 years, you're completely debt-free. You have no student loan debt. You owe no one anything because you are in control of your money because you became the bank and took back the banking functions in your life. And not only that, you created a legacy for you and your family. And this all happens if you follow the 10-step ultimate guide. Now, you could also go this path. You could do nothing, change nothing, just keep living your life the exact way you are. You gotta kind of pick. It's like red pill or blue pill. Which one is it going to be? One requires some pain and sacrifice today. The other, hey, you don't have any pain and sacrifice at all. You just continue on just like you are now. The choice is yours. I made my choice. My stories tell that choice. My videos tell that choice. And by the way, make sure you subscribe to this channel and click that little alerts button so that you're notified every time I put a new video out. And to help you a little bit more, I'm gonna have you watch this video right here. It's called the Money Multiplier Method. It's a 90-minute video. I know that seems like a long time, but I promise you, watch this 90-minute video, it will transform your mindset so you then can transform your financial life. Folks, I hope you've enjoyed this episode. This has been another What Now? What's next for you? We'll find out. See you next time.